Hello everyone, welcome to my channel. Today we are going to start chapter 2 of accountancy from class 12, accounting for partnership firms fundamentals. This chapter is very broad and it is classified into 4 chapters. In this chapter we will talk about the basic concepts of the partnership, and all the other chapters are totally based on these concepts. And these concepts make it easier for you to understand the meaning of partnership firms. Let's start the topic. There is one person who is a sole proprietor and he has a grocery shop. He has 2 friends. All of them decided to start a new business. They opened a departmental store. All 3 of them together invested the same amount and decided that they would share the profits and losses in the future equally among themselves. So what is the business that all 3 of them have started together is called partnership. If a person runs a business, we call it sole proprietorship. And if 2 or more persons run the same business together, then we call it partnership. Simply, partnership consists 2 or more people who combine their resources to form a business and agree to share risks, profits, and losses. Let's see the meaning and definition of the partnership firm. Partnership firms in India are governed by the Partnership Act 1932. There are so many provisions which are needed to be followed by all partnership firms in India according to this act. Partnership is defined by Indian Partnership Act 1932 under section 4. Partnership is the relation between persons who have shared the profits of a business carried on by all or any of them acting for all. Means partnership is a relationship or an formal agreement between 2 or more persons who have accepted to share the profits, income and losses from the business generates. Here we need to remember that when you are going to write the definition, we should not mention profit and losses of the business. We should only mention the profits of the business, because partnership firm carried on mainly with the motive of earning profits. Any business organization which is not carried on with the motive of earning profits, that cannot be called as partnership. So the main intention to earn the profits. The losses may occur, but the intention only to earn the profits. One more thing, we need to have business, and that business should be legal. Basically, it is a relationship between persons who agree to carrying a business, also to share profits of the business. So that business may be conducted either by all the partners together or by one partner acting on behalf of all others. It means each and every partners can actively participate in the conduct of business, and it is not compulsory to all partners take actively participate in the business. There will be a few partners who invest the money in the business but not actively participate in the business. That partners are called sleeping partners, and those who are actively participate in the business, that are called active partners. So, in simply, we can say a partnership is a kind of business relationship where a formal agreement between 2 or more people is made who agree to be the co-owners, distribute responsibilities for running an organization or a business, and who have accepted to share the profits, incomes and losses from the business under the supervision member or on behalf of the other members and based on continual or regular basis. Let's see the example. Aman and Deepak are childhood friends. Aman is an architect and Deepak is a consultant. They contributed equally and purchased a plant of rupees 10 lakh. After a year, they sold it on rupees 12 lakh and share the profits equally. Are they doing business in partnership? No, they are not doing business in partnership because partnership requires the business conducted on the regular basis and share the profits. But in this example, it is only a one time activity. So, partnership is based on the daily routine course of action. In this, it is not done on continual basis. So, this is not a partnership. If Aman and Deepak done this activity on the regular basis and share the profits, then it will be called a partnership. The persons who have entered in the partnership with one another individually are called partners. When the persons entered in a collectively, then it is known as a firm. Means a person operating or conducting one or more trades or business are called firm. The name under which the business is carried is called firm name. Everyone keeps the name of that business before starting their business. So each organization or business has its own name to give unique and different identity to their business. Means the name which the business is get registered under the Business Registration Act 2018 and carried on. That is called firm name. The name under which the business is carried is called firm name. Next is nature of partnership. In legal point of view, partnership is not a separate legal entity from its partner. Both are treated as equal. If a firm goes into financial distress or debt or any liability and not able to pay its liability, the personal assets of the partners can be utilized for paying all the debts or liabilities of a firm. Hence, partnership is not treated as a separate entity from its partner. Next is features or characteristics of partnership. First one is two or more persons. If any firm that needs to be called partnership firm, it is necessary that they has to be at least two partners. A single person cannot be called as a partner. He will be treated as a sole proprietor. If there are two or more persons, then in that case we call it a partnership firm. So minimum number of person is 2 and maximum is 100. In earlier Companies Act 1956 specified more than 10% in case of banking business and 20% in the other types of business. Second is agreement. Partnership comes into existence by an agreement, either oral or written. The written agreement is called partnership deed. It is important to have written partnership deed to avoid and settle possible disputes if it is used. A oral agreement is enough among partners to form a partnership firm, but it is advisable to have a written agreement to avoid future disputes among the partners. Third is lawful business. There are certain types of business carried on by the partners and shares the profits generates. The partners can take up only legal business activities. Any illegal or unlawful activities carried out by the partners are not included in the partnership, and it does not enjoy the, and it is important for a firm to carry some that kind of business and should have a profit gaining motive. So profit sharing, so partnership is formed to do a lawful business only. Fourth is profit sharing. Agreement between the partners must be to share the profits and losses of the business, and it is not essential that all the partners must share losses. Partnership is an agreement, right? where all the partners accepted to share the profits and losses of the business, so they can share either equally or share according to the capital contribution ratio or at agreed profit sharing ratio that is mentioned in the partnership deed. Fifth is business can be carried on by all or any of the partners acting for all. Means that each and every partner can participate in the conduct of business and each partner is bound by the act of other partners in respect to the business of the firm. We commonly refers to relationship between partners as the principle of mutual agency. This principle means that all partners are agent for each other. The decision of one partner taken in the ordinary course of business will bind other partners as well. All the partners are liable for acts of the firm individually and severally. In other words, partners are agents as well as the principals. Now that we are clear with the definition of partnership and its features, the next topic is rights of partner. First one is every partner has the right to participate in the management of the business. Means partnership agreement gives limited power to the management to control the management of the business. So each take part in to conduct an affair of the business. Second is every partner has a right to be consulted. Every partner has the right to be consulted about the affair of the business in case there arises any differences or dispute in ordinary matters connected with the business. Such disputes and differences can be solved by the majority of the partners. Each partner has right to express their opinion before deciding such a dispute, and it is necessary to get consent of all the partners to make any changes in the nature of business. Third is right to inspect the books of account. Every partner has the right to inspect the books of account and have a copy of it. If any partner finds any error in the books of account that needs to be checked or corrected in the books of account, they can check and maintain a new books of account and take a copy of the same if required. Fourth is the right to share profit and losses with the others in the agreed ratio. Every partner has the right to share the profit and losses of the business equally or at the agreed ratio which is prescribed in the partnership deed. If there is no agreement, then it can be shared the profit equally and the percentage in which they have contributed to the capital of the partnership firm. Fifth is right to receive interest on loan or advances a loan. If a partner has advanced a loan, the partner has the right to receive the interest thereon at an agreed rate of interest which is mentioned in the partnership deed. In case rate of interest is not mentioned in the partnership deed, then he will entitled to receive interest on loan of 6% per annum according to Partnership Act 1932. For example, Rohan, a partner of a firm, has advanced a loan to the firm of rupees 1 lakh. Will Rohan get interest on the loan or at which rate and why? If any rate of interest is mentioned in the partnership deed, then Rohan will get at that rate which are mentioned in the partnership deed. If it is not mentioned in the partnership deed, he will get the interest on loan by 6%. This interest on loan would be paid because it is a charge. It is charged against profits. Sixth is right to indemnified. Partners can make some payments and incur liabilities through their best judgment and their decision in the course of their business. They can claim indemnify from each other for their decision. Hence, such decision must be taken in the case of emergency only. 7 is right to stop the admission of new partners. All the partners have the right to prevent the introduction and admission of a new partner in the firm without the consent of all the existing partners. If any person disagrees to admit the new partner, no new partner can be admitted. For example, suppose X and Y are partners. Y wants to admit his son B into a business. B can become the partner of the firm with the consent of all the existing partners, unless otherwise agreed upon. If any partner has disagreed to admit B as a partner, hence a new partner B will not get admission to the firm. Simply, a new partner can be admitted only with the consent of all the existing partners. Every partner has the right to withdraw from the business with the consent of all the other partners. In case of partnership formed at will, this may be done by giving proper notice to that effect to all the other partners. Means after giving proper notice, a partner has the right to retire from the firm. Ninth and last point, right to indemnify the expenses. If a partner incurs expenses on the business or he pays amount on behalf of the firm, that partner gets indemnified for the payment made by him for the firm. So here was the rights of the partners. Hope we are